We've just received a shocking jobs report which shows that the Fed rate hikes are not taking effect, and this could spell disaster for crypto. But as we speak, we are seeing Bitcoin, ignore this, up 4.7%, wider markets in the green also. What is going on? We're going to take a look at the charts, and one thing that for sure that we need to look at is the dollar index. As you can see, the dollar index is falling today, getting rejected from a key level, allowing crypto to rally today despite a horrible jobs figure. As you can see here, the Dow rallies 500 points on Friday, cutting losses for the week. But we've just had the non-farm payrolls come in. The expectation was 205,000 new jobs created. We got 261,000 new jobs created in October. This is a big miss, and markets should be quite upset. But is there a little bit of a delayed reaction? Well, there's a little bit of a caveat which you need to look at, and that is looking at the unemployment rate. So whilst the number of jobs was 261,000 versus the 205,000 expected, a big miss on everybody's cards, the unemployment rate was expected to come in at 3.5. It came in at 3.7. So it's moving in the direction that Jerome Powell and the Fed wants. Remember, they want to soften the labor market. Right now, it's extremely tight. Jerome Powell continues to talk about this, and the tighter it remains, the more runway he has to continue to increase interest rates, which spells more pain for crypto. So it's the unemployment rate which we have to focus on. So you can consider this as a bit of a mixed report, but one thing is for sure, the yearly wage growth was up 4.7%. Okay, that met expectations, but the monthly was up 0.4% versus 0.3% month on month expected. So that was a miss as well. So the market should be shaken by this. And are we just getting a delayed reaction? Is the market just having a bit of a euphoric day today after a horrible week? And is the pain going to come shortly after? Well, we're going to jump into the Bitcoin chart, because as I can see here, a big move here on Bitcoin. Now, what is this move? Why is this happening, and can it sustain? Well, first of all, let's take a look at the technicals. As you guys know, we were looking at an M pattern, or an inverse Adam and Eve pattern. Okay, so we went here, touched, and then we were coming back down to the 20k level, and indeed we did. Had we have broken this, we would have formed our M pattern and broken to the downside. The important strength from here meant that we were able to then turn this into a descending triangle pattern. Okay, so you can take this trend line from here, you can use the bounce, and anytime you have an M pattern which bounces off the bottom and doesn't break out, you turn into a triangle. And it's the same from the other way. If you have a double bottom pattern, which is a W, that turns into a triangle as well. If you're not sure what I'm on about, ijaz.uk/TA free TA course. It's in links in the description. Go check it out and pick up all these different patterns. So as you can see, the normal technical target from a breakout of this pattern is to come up to the top of the wedge. So you can pretty much see we've met that price target, which is brilliant. But now what? Well, you need to look to the left at the next pivot point. And the next major resistance level comes from the support from this triangle which we were in. Okay, so you can see I extended the yellow line, and the support's going to come in from this level. So now what we need to do, we've got the higher high, which is perfect. We managed to get higher than these highs. Really good news on Bitcoin. We've got a higher low, which is good. Now we need to continue our way up, rotate maybe down, collect some support, and work our way to 22,000. Remember, we got rejected on the previous peak here at about 22,800. So that'll be the next level once 22,000 is reclaimed on Bitcoin for us to work towards. Now, why are we moving? We've got this horrible jobs report, but why are we seeing this in the markets? Now, one thing is for sure, we have seen this coming over the last kind of 24, 36 hours since the FOMC meeting. We've seen that the markets have been pretty buoyant, right? We saw Phantom exploding yesterday and up again another 8% today. We saw Polygon Matic exploding as well. You can see Matic is up 20% today, now sitting at $1.13. Two tokens we talk about a lot on this channel, so congratulations if you guys were trading or dollar cost averaging in. Again, you could do so using the links in the description to BYBIT or BitGet. If you've not bought any cryptocurrency before, those are the two exchanges I personally use on a day-to-day basis. What is going on? Well, the main thing we need to be looking at is the dollar index. And the dollar index is showing some major weakness. I'm sitting here on the 4-hourly chart, and what you could see is on the dollar index, we're on this big upward trend. And we were monitoring this very carefully, right? And as long as this was showing some strength, we knew that this was inversely correlated to Bitcoin and Bitcoin would struggle. But then we broke the trend. Great news. But then what you saw is that the dollar index wanted to back test this trend line. And this is the important bit. Had it have just got back above, then it was not in a bearish pattern, okay? But by getting rejected from the trend line, we've just shown that we've managed to turn this trend line from what was support into now resistance, a very important technical analysis concept, which again, if you're not familiar with, ijaz.uk/TA, you're going to pick all of this stuff up in that course for completely free. And it's not going to be free forever, so definitely go check that out. Now, if I bring out the EMA ribbon on the dollar index, you're going to see what I mean. We've managed to get back below our 4 hourly. But what's more important is if I switch the daily EMA ribbon, you can see where we're at. We're trying to push back below. And if we can again close below over the next couple of days, if we can get some momentum, push below, get a lower low below these lows at 109.5, then we can turn this into a proper downtrend on the dollar index, which could give us that sustained rally on crypto, which we've been waiting for. And I think the markets are taking this more into account than the jobs report. The market is actually right now shaking things off, which is incredible. I mean, if we head on over to the Fed rate monitor tool and take a refresh, what you can see here is that since that jobs report came out, counterintuitively, remember, if the labor market's tight, you think that Jerome Powell would have more permission to increase rate hikes. The market has decided to price it 6% that we will see a pivot. In other words, we're going to see 50 basis points at the next meeting on December the 14th. Very, very interesting. Now, whether this will last or not, I'm not sure. We're going to have to watch this over the next couple of days and over the weekend and Monday. But it's interesting to see that the market decided to increase the price, the probability of seeing a 50 basis point rate hike, even though we had a worse jobs figure, which makes me believe that the market is doubling down, not just on the Dixie weakness, but also the fact that the unemployment rate was 3.7% versus 3.5%. I think that was more important to the market because Jerome Powell does talk about that. He does talk about wanting to get to the unemployment rate up to that kind of 5% mark. And I think that's where he's going to ultimately want to get to. And it's not going to happen overnight, but at least he's making progress towards that kind of level which he wants to achieve. Let's come back onto the Bitcoin chart. And what are the key price levels I think this move can go to? Well, I showed you that we need to get to 22K, right? That's where it needs to get to. And then we need to work our way to 23. But I do want to zoom out and show you some of the more exciting patterns here on the weekly chart. And if I pull it over to the weekly chart, you'll remember that we were forming this W pattern. And this is where things get exciting because now this W pattern is materializing, right? We've managed to bounce twice from this white line. And you can see here, in fact, I want to show you this on a line chart. It makes it far easier to see. Now you can see it clearly. Look at this, guys. You come down, you bounce, you go back down. Now we're getting our bounce. And if we can just work our way back up and grind our way back to that 24,300 level, which is not going to be easy. There's loads of resistance, which we've got hidden in between where we're at currently and 24,300. But once you get to that neckline, then you can look for a nice big move into your EMA ribbon. And that's what I've been calling for over the last week or two is can we get that relief rally? And that's what I want to take advantage of with trades and also making sure I'm prepared because the reality is right now it is a relief rally. And the reason it's a relief rally is we're so extended from our EMA ribbon. Nobody can argue that this is not a bearish trend. We are in a bearish trend, right? Just look at it. We're very below our weekly EMA ribbon. And so for now, it's just a relief rally going into your EMA ribbon. But relief rallies can turn into the next bull market. So we need to be careful. That is why I won't try to time the market. Even though I expect us to get a nice move here, and then I think the bears will step back in, maybe give us some more pressure to the downside, I cannot risk that because I've seen times where we can just turn back in and go for our next run to the upside. And so I want to be in the market. Let's just understand we're going against the grain here. We're going against the bears. The bears are in control, but right now there's nothing to suggest we cannot get a relief rally and take some of the pressure off this market. You can see how the market is just shrugging off major things right now. We had company earnings. Market shrugged it off. We had companies laying off staff hugely. Even some of the big names out there, Apple, etc., laying off staff, right? Market shrugged it off. We had the FOMC 75 basis points. Market shrugged it off. You had non-farm payrolls today miss. Markets are shrugging it off. Market wants to move. And it seems like crypto wants to be the precursor for that. Say, look, we're moving. I mean, you got Bitcoin up 4.6% today. If we go to the traditional markets, I mean, you've got, let's just take a look here. You've got NASDAQ only moving up 0.65, right? So crypto seems to be leading the way here more so than the traditional equity markets, which shows that a lot of people are starting to allocate their funds. They want to get their funds back in the market, regardless of what's going on. And that's an interesting shift. The fact that we're seeing these moves in Phantom and Polygon and now Bitcoin, Ethereum up 7.5% today, Solana up 8%, is showing that people are getting frustrated. They want to allocate their money. They think we're through some of the worst of it. And they're really starting to now double down on this idea that maybe, just maybe, that was the last 75 basis points. Now, am I convinced? No. But 56% of the market expect a 50 basis points meeting at the next FOMC meeting on December the 14th. That means you've got 6 weeks to front run the market to get in ahead of that expected pivot. But some people expected a pivot in the last meeting. Some people even expected a pivot in the meeting before. And that's the risk you take when trying to front run the market. Hope you guys enjoyed this video. Don't forget to smash the like button and subscribe if you appreciate this type of updates. Then let me know in the comments below. Don't forget to go watch this video here. And I'll see you in the next one.